Hey guys, welcome again to Passion for Us, Passion for Real Estate. I'm your host, Cris Del Cid, alongside
Nestor Gotay. We are real estate agents licensed in Virginia, Maryland, and the district.
That's right, guys. And if you're here in the area, in the DMV, you have noticed that we had some spectacular weather today.
That's right. Let's enjoy this. And finally, spring is here, and we hope it sticks for a little longer.
Definitely. And if you didn't get to enjoy it today because you were stuck at work or with clients or whatever the case was, tonight's supposed to be just as beautiful, or the weekend too.
That's right. So we're this is episode 6 of season 2, and we are going to bring you guys today conventional financing.
That's right, guys. So we have another awesome video for you guys today, courtesy of the folks over at Fannie Mae, regarding conventional financing.
So there are two major players in the conventional financing world, right? So Fannie Mae and Freddie Mac, and each of them have a program designed for first-time home buyers. So Home Ready and Home Possible, right? So these are good programs because it only requires 3% down payment. Each of them requires 3% down payment compared to FHA financing that requires 3.5% down payment.
That's right, guys. That could save you a lot of dollars when it comes to closing. The 0.5%, it's a lot depending on how much you're going to buy. And then also, there's a lot of great features and advantages to going with these conventional programs, but they might require a little bit more. They might have a little bit more requirements. The next one going along, just like you saw in the video, is non-occupant co-borrowers, which means that somebody that could be a relative or that doesn't have to be a relative can co-sign for you in case you don't have the income to qualify for the loan by yourself.
Talking about incomes, it also has income requirements. Like if you make too much money, or the program determines that you make too much money, then you wouldn't qualify for this specific program. Remember, this is designed to help first-time home buyers, so it has some income limits. If you live in an area that is high price area, it has a higher income limit for you to qualify.
That's right, guys. Also, along with this, you're going to have to take a home buyer education course, which can be done online or in the classroom. It's fairly inexpensive. It runs about $75, maybe a little bit less, maybe a little bit more. But definitely once you get qualified for this program, you'll get all that information. The advantage of taking the program here is that you'll get a lot of information out of it, and it's kind of like a prep course to being a first-time home buyer and homeowner, and kind of what you'd expect from it. So the advantage to this is that taking this course, Fannie or Freddie gives you better terms on your loans, better rate, and also the low down payment as well too.
That's right, and a little bit of a lowered mortgage insurance. So, and talking about mortgage insurance, we talked about the previous episode that FHA is the largest world mortgage insurer. So when it comes to mortgage insurance, conventional also requires mortgage insurance. But with this program, it is cancelable when you reach 80% loan to value, which can mean a lot of savings for you guys. So when it comes to FHA, the mortgage insurance stays throughout the life of the loan. When it comes to Home Ready and Home Possible, you get rid of it once you reach 80% loan to value.
That's right, guys. There's other restrictions too, so you want to contact your local mortgage professional. I believe one of them is it has to be after 5 years too. So you can't cancel within the first 5 years. But alongside with that, I mean, really thinking about it, that's a lot of money you're going to save, not only in the long run, but also you save the refinance
cost.
Versus
right.
FHA, you're going to have to refinance. In this, it's a small process you take to get it canceled, but it's not a complete refi where you have to spend those thousands of dollars doing it. Along with that too, another advantage, just like FHA, there's down payment assistance programs, and again, restrictions apply to that as well too. So you want to check your local mortgage professional.
That's right. And also, if you're looking for a property that needs repair and you also want to finance those repairs, Home Ready and Home Possible have options if you want to finance those repairs on top of the price of the property. Right, so these loans are really good for first-time home buyers, right? So you have the FHA option if you have lower credit score, and if you have the conventional options for those that have a higher credit score. That takes us to CIA, right?
Yeah, that's right. CIA, you heard it here first, guys. Credit, income, and assets. So with credit, like Nestor said, you can have higher credit scores, but as you can see with these programs, they're designed to save you in a way during the long-term course of the loan.
That's right. When it comes to income, FHA doesn't really have income limits, but these two programs have a little bit of income limits because are designed to help first-time home buyers. And then assets, they're both really comparable there.
Yeah, as far as the flexibility, the assets, just like we spoke before, with FHA, you can have multiple sources and the seasoning too of the assets. So
that's right. So let me show you guys where you guys can go yourself and look for more information, because we like to do that here in this show. All right. So for Fannie Mae, go to Fannie Mae Home Ready. Right. So here you will have more information. Right. So you take whatever information you like. There's plenty of information over there. And then when it comes to Freddie Mac Home Possible, the same thing. Go to Freddie Mac Home Possible, and you're gonna find a lot of more information over there. So, guys, so this is what we bring to you guys this episode. We really, really, really hope you guys like it. We really hope you guys find it interesting, and above all, we really would like you to use all of this information whenever you're ready to buy your home.
Definitely, guys. Remember, just to recap, going with the FHA versus the conventional. Conventional might be a little bit harder for you to get to in the beginning, but in long terms, you're better off in a conventional, although it's slightly a little bit stricter and less flexible in some areas than FHA is. So that's it for us today, guys. Please, follow us, get with us on all social media platform, Facebook, Twitter. Give us your feedback. We really appreciate it. Anything we could do better, anything we missed. This is Cris Del Cid signing off alongside
Nestor Gotay. We are real estate agents licensed with Realty Concepts Group. Thank you, guys.